rate like we've never seen it before in financial markets. I don't know when to buy stocks, but I know whether to buy stocks. If you're going to do dumb things because your stock goes down, you're paying over 40 times earnings for something whose earnings can't grow.
Hello and welcome back to Biz Bucks. On February 22nd, 2025, Warren Buffett released his annual letter to shareholders, a well-anticipated event in the financial world. However, this year there was something unusual about it which quickly caught the attention of investors. There was a strong, albeit subtle, signal that could be interpreted as a warning for the financial global market, one that seemed unprecedented in its implication. Some may dismiss this as a mere speculation, but the movements inside Berkshire Hathaway, Buffett's company, are raising serious red flags. For context, Warren Buffett is not the kind of businessman who typically issues warnings or shares anything that might jeopardize his long-term strategy for shareholders. Over the course of his 6-decade career with Berkshire Hathaway, he has rarely, if ever, made a strong negative prediction about the market. The general advice when it comes to understanding Buffett's view on the market is not necessarily to take his words at face value, but to pay close attention to his actions, particularly how Berkshire Hathaway is investing its money. This is key to understanding what Buffett is thinking. Buffett has always managed to stay calm and balanced in his commentary, even during periods of market upheaval. He has been known to avoid controversial statements, focusing more on long-term trends than short-term forecast. Therefore, when it comes to understanding what might be ahead for the economy or the market, it's crucial to watch his moves and his company that they make rather than listening too closely to his words. This is especially true considering the wealth of experience he has. With that being said, while Buffett may claim he doesn't predict the future, it's clear that his long-term vision and insight into the market are invaluable, making his actions speak louder than words. One of the most notable things in Berkshire Hathaway's history is its reputation as a consistent buyer of stock. This strategy has been a hallmark of Buffett's investment philosophy, using his world-renowned skills to acquire undervalued stocks and hold on to them for the long haul. Berkshire Hathaway's strong portfolio has been a reflection of Buffett's investment success, with the company continually growing its holdings. However, something has changed recently, especially in the last few quarters. As the fourth quarter of 2024, Berkshire Hathaway was sitting on a massive cash pile, with reserves reaching $334 billion. Over the last 9 quarters, dating back to the fourth quarter of 2022, the company has become a net seller of stocks. This marks a significant departure from the norm. Even more surprising is the fact that Berkshire's cash reserves have grown at an incredible fast pace. Starting in 2023, the company increased its cash reserves by about 3% per quarter. However, in 2024, things took a drastic turn. Buffett began aggressively offloading stock, including shares of Apple, and as a result, the cash pile grew by an average of 16% per quarter, culminating in an 81% increase over the course of the year. The unprecedented shift in strategy has raised concern. Buffett is selling major stocks and accumulating cash at a rate that can only be interpreted as extreme caution. No matter how much he downplays it or tries to make it seem like a normal business move, the reality is that his buildup of cash can't be ignored. Buffett is known for his ability to recognize market trends long before the broader public catches on, and this massive cash buildup suggests he anticipates something significant and potentially very bad on the horizon. On March 3, 2025, Buffett was asked about his thoughts on the state of the economy during an interview. He expressed that the subject of the economy was the most interesting thing in the world, but he could not discuss it in detail. More importantly, he referred to tariffs as an act of war, a statement that indicated a level of seriousness and concern about the future of the economy. The lack of clarity and his veiled concern in discussing such issues seemed to suggest that Buffett was anticipating something major, which made the growing cash reserves at Berkshire even more alarming. Looking back in history, there's a clear pattern that emerges when analyzing Buffett's investments. If we look at Berkshire Hathaway's cash reserves over the past several decades, there were noticeable periods where Buffett started building a large amount of cash, right before an economic event occurred. There was evidence before the dot-com bubble burst in the early 2000s. At the time, Buffett grew Berkshire's cash reserves but didn't deploy as much cash into the market, particularly in the tech sectors because of his long-standing aversion to tech stocks. While he didn't make any bold predictions, the pattern of accumulating cash was unmistakable. And sure enough, when the market collapsed in 2001 and 2, Buffett was in a prime position to buy up high-quality companies at bargain price. Similarly, a few years later, Buffett even began growing his cash reserves again in the lead-up to the 2007 housing market crash. In the years before the collapse, Buffett made several subtle remarks that raised red flags about the state of the housing market, particularly the overvaluation in certain markets. Even though he didn't directly predict the housing market crash, he spoke about the speculation and potential risks in the market. Buffett was once again positioning Berkshire Hathaway for a potential downturn, and his massive cash reserves allowed him to make investments at a fraction of their value once the crash occurred. This pattern appears to be repeating itself in 2025. While Buffett is known for keeping his cards close to his chest, the rapid growth of Berkshire Hathaway's cash piles suggests that he's bracing for some form of turmoil. The actions of the companies are aligning with patterns from previous years when Buffett prepared for market crashes and downturns. There is evidence to suggest that certain real estate markets, particularly Miami, are showing signs of a potential collapse, just as Buffett had predicted in 2006 when discussing the housing market. In 2006 interviews, Buffett made a significant comment about the U.S. residential real estate market. When asked about the future of the housing market, he alluded to the risks in the high-end property market, particularly in areas where speculative investments had driven prices to unsustainable levels. He observed that in some areas, particularly high-end markets, there had been a bubble, and he wouldn't be surprised if there were significant downward adjustments in prices. This statement proved precipitous when, just 1 year later, the U.S. housing market collapsed, and many of his properties that Buffett had pointed out saw dramatic declines in value. Looking back at the current state of the housing market, the situation in 2025 mirrors many of the signs Buffett warned about in 2006. In cities like Miami, the condo market is experiencing significant shifts. There is a growing inventory of properties for sale, and the months of supply for condos has skyrocketed to 16 months, a far cry from the 1-month supply seen during the pandemic boom. As the real estate market faces stagnation with flat prices and low transaction volumes, it seems that the market is in the state of pause, waiting for the next big move. This stagnation in the housing market, combined with Buffett's growing cash reserves, suggests that another significant market correction may be imminent. Buffett's actions and his growing cash pile are eerily similar to his behavior before past financial crises. In the past, these signals have preceded a major market crash, and it's possible that we are once again on the cusp of a financial downturn. While it is impossible to predict exactly what will happen in the coming months or years, the evidence points to the likelihood of a significant economic event on the horizon. Buffett's increasing cash reserves are a clear signal that he is preparing for something big, and his cautionary approach is in line with previous instances where he saw financial crisis coming. Whether this will manifest in the form of a real estate crash, a stock market downturn, or something else entirely remains to be seen. But one thing is clear. Warren Buffett's actions suggest that he is preparing for another market shakeup, and his massive cash reserves could be poised to move big moves once again when the market reaches its lowest point. In conclusion, while Warren Buffett's words may be measured and his actions discreet, the movements within Berkshire Hathaway provide a clear indication of his perspective on the future of the global economy. The massive cash buildup, the strategic selling of stocks, and Buffett's veiled remark all head and point to the possibility of an impending financial crisis. History has shown that Buffett is often ahead of the curve, and those paying close attention to his actions could be well served to do the same as they navigate the uncertain financial landscapes ahead.